In this video, we're going to be exploring the different types of investments available. Then we'll move on to the different ways to build your portfolio. And finally, we'll talk about how you can actually buy those investments and keep tabs on them. Let's begin with stocks and bonds. Stocks represent partial ownership of a company, and that stock's value can potentially increase over time as the market is going up and/or as the company becomes successful. But if the company isn't doing well, or if the market takes a hit, there's also the potential for the stock price to drop. And what's really great is that some stocks may also allow you to earn income in the form of dividends, which are a distribution of earnings from a company to its shareholders. Bonds, on the other hand, are loans that you're giving to a company or entity, with a promise to get paid back in full after a certain amount of time. Similar to how some stocks pay dividends, bonds also give you regular income through interest payments and tend to be less risky than stocks. But the downside is that they also tend to have lower returns versus stocks. Next, there are mutual funds and ETFs, which are professionally managed pools of money or assets that are used for specific investing goals, like matching the S&P 500. And what I've learned from some of the professionals at Fidelity Investments is that they let you spread your dollars across a variety of different asset classes, which can help shield your portfolio from taking a hit in the market if a single investment suddenly drops in price. I've also learned that the disadvantage of these is that they may come with certain fees or other costs. Okay, so now that you know how some of the more popular investment types work, it's time to figure out which ones to actually add to your portfolio. And for that, I'm going to bring in Fidelity's investment professional, Trayvon.
Thanks, Nia. Okay, so most people think that there's some trick to choosing investments. Turns out, there's really no trick at all. It's just about making sure your portfolio is as diversified as possible. And you've heard the phrase, don't put all your eggs in one basket, right? When it comes to investing, this means you should consider focusing on a broad range of investments instead of placing all your bets on a small number of high-promise ones, which in turn will help you reduce exposure and mitigate risks. And just a heads up, diversification does not ensure a profit or guarantee against loss.
Great info. Thanks, Trayvon. Okay, before we move on to how to actually buy investments, there's one more step to talk about: doing your research. This research will also come into play when figuring out how to diversify your portfolio.
And one more thing, Fidelity offers some great tools to help you do your research, like our stock screener that can help you match your ideas with potential investments. And once you've done your homework, it's then time to buy those investments. To do that, just go to your account and search for the ticker symbol of the investment that you've chosen. Then, just decide the dollar amount or number of shares, hit buy, and that's it. There's also an option to buy fractional shares, which can make it more affordable to buy the kinds of investments you want.
And Trayvon, something important you've always told me is that after you've bought your investments, it's good to give your portfolio a little TLC from time to time. That means double-checking that your account is still a good fit for your financial situation, that you're contributing enough, and that your investments still align with your goals, risk tolerance, and time horizon.
That's absolutely right, Nia. And it's perfectly normal for investments to go up and down over the short term. For example, if you look at this chart of the history of the US stock market, sure, you can see lots of instances of market volatility. But if you look at the entire timeline as a whole, you can clearly see that things are mostly trending upward. Bottom line, try to stay calm, don't panic, and always focus on the big picture.
Which is great advice for any life situation. Okay, well that's it for today. Have a question? Drop it below in the comments, or check out Fidelity on social, where they discuss all sorts of topics like this and more. Till next time, investors.